Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So apologies for not posting in the last few days. Things have been really busy. You know, when you're working and there's a time of the year where you can't seem to get time at all. That's exactly how I feel right now. It's been quite challenging over the last few weeks to actually do the videos, but alhamdulillah, I will continue doing as much as I can. And today we are going to talk about wide moat and 5 companies that have an excellent wide moat. Now, the reason I talk about wide moat is a lot of the time is wide moat basically came from Morningstar. So there's people in Morningstar that came up with these basically ways of measuring a company's competitive advantage, if you like. And a wide moat is a term coined by Warren Buffett to describe a business with a sustainable competitive advantage that protects it from its competitors, allowing it to basically have a higher returns over a long period of time. So that's basically where it came from. And we talk about a lot in here. And the reason I talk about a lot is because I've realized those companies that have a wide moat have basically a massive competitive advantage over their competitors. And it's very difficult for other people or other companies to copy what they're doing. They might be able to do it a little bit, but they cannot copy the entire, basically they cannot copy the entire business, if you like. So I really like those type of businesses. I always aim to get some of those. There are sectors with like the oil, energies and materials and whatever, where it's almost impossible to have a wide moat. But majority of these companies that I own in my portfolio do have wide moat. So we're going to talk about that today. I'm going to give you 5 companies. We're going to talk about what it is first, and then we're going to talk about 5 companies that are currently on some of them are in my portfolio that have a wide moat. But before we do that, this is the portfolio. I'm going to do update InshaAllah very soon in the next couple of days to share the entire portfolio, dividends received, all of that stuff InshaAllah. And yeah, it hasn't actually done much in terms of basically going up. I think for the 1 month we have almost a flat. But yeah, we'll continue to see what happens with overall markets. By the way, things basically looking for the 1 month, basically things are picking up. So like 4% up now in terms of the S&P 500, the Dow Jones, Nasdaq's about almost 7% up, 6% up, and FTSE 100 is about 1% up overall. Now, the other thing I want to mention is also the greed is back now. Majority of the people are now in that basically euphoria situation where they think stocks are untouchable, that people are buying really high valued like companies that are trading higher multiples right now and just taking a bit of a risk. And it always happens. It always happens around this time where everyone basically just thinks, okay, we're going to go to the moon. And, people have sold it up before. Now they realize things are picking up and all of a sudden they're buying it in a higher prices. This is why I always say, do not buy and sell. You cannot time the market. It is really difficult. So yeah, good luck to anyone who's trying. Now, a couple of more things. If you haven't joined us at the Patreon account, please do so. It really genuinely helps the channel. And thank you to everybody, by the way. It's been absolutely amazing looking at your portfolios. So last video I mentioned the fact that I would love to see your portfolios. Tell me a bit about yourself. Tell me basically and anything I need to know with regards to your investment, like journey, what you're basically where you're working, what you are, like just overall information about yourself. And some of these, it's been absolutely inspiring. The ones that I've received has been absolutely amazing. There are people in their early 20s, and I genuinely mean it, like 22, still at university, finishing off just uni, that have got like 20,000-30,000 pounds invested in the stock market. Trust me, if you continue, if you stay disciplined, you will be doing an absolutely amazing job if that was you in that position. So well done to all of you if that shared with me. And all you need to do is basically fill this information, tell me a little bit about yourself, and then basically share your portfolio. So just this is an example, put the tick symbol here, and then tell me how many shares of that, what basically percentage of is it basically your portfolio, and then a little bit of information. And then what I'm going to do is I'm going to give you my honest opinion about your entire portfolio. Good or bad, I'll share basically with you my plan InshaAllah. And you can get access to that if you join us in the Patreon account, the Intelligent Investor section, and you can get a copy of that spreadsheet. All you need to do is make a copy of it, and then you can send it to me InshaAllah by email or however you want InshaAllah. Right, let's now get to the 5 companies we came here for. But before we do that, the most important thing, so wide we talk about moats, are basically the economic moat side of it. And like I said, it's something basically Warren Buffett came up with it. And there are different basically categories within this, and I'm just going to give you very brief information about each one of them. So the first one is the basic intangible assets. Okay, so this is basically the patent and brand of the company. For example, there are some companies that have a so if a company has a patent, especially with the pharmaceutical companies, it's very difficult for other companies to actually copy that, right? And not only pharmaceutical companies, some of the semiconductor companies have that. Pharmaceuticals, it expires after a certain amount, basically a certain period of time, of course, because drug makers and so on. But again, it's one of those things basically companies enjoy. The next one is the switching courses, and this is quite difficult, especially for technology companies, because some companies have a so for example, if you hired Salesforce, for example, as one of the companies to provide all the services for you, right? To change from Salesforce to Microsoft or ServiceNow basically will cost you extra money. On top of that, there's a lot of data and things that needs to be migrated from one basically system to the other. So for that reason, it is quite difficult to do that. It can be quite costly, and basically it might not be it might not be a good idea to do that. So a lot of companies stay where they are because they know it's better for that to stay within that ecosystem, if you like. Then the next one is the network effect. And this is something I'm actually noticing now with a couple of companies that are under my radar, right? So one of the company things is like Visa, for example, right? So it says companies' service increases for consumers, suppliers, and developers as more people use the service. Now, one thing I've noticed is the on-cloud shoes. I'm seeing more and more people basically having it. And then that means there are more, basically there's free advertisement for the company, and because then all of a sudden there's more people using it. So that's basically it. And also it's similar to MasterCard, Visa, and so on, the fact that the payment systems are basically that everyone uses. No one is going to go to a new shiny company knowing that these companies already exist. The next one is the cost advantage. And this is basically very simple. So there are some companies that can provide sells goods and services for lower cost, if you like, okay, including the McDonald's and so on. So it is very difficult for any other company to get into that sort of a market. Okay, the next one is efficient scale. And this is where the market is quite small. So we got a service market of a limited size in which potential competitors have a little incentive to enter. So there's no point, basically. It's quite small. And the other thing as well is it will cost you a lot of money to enter. And top of that, you're not going to make huge profits because there's already existing companies. Like for example, Union Pacific is one of those companies, and because of the tracks that these trains are running on, is very difficult for any company to come in to lay all the new tracks, if you like, and on top of that, try to compete with Union Pacific and so on. So they've been left alone for some sort of thing. So that is basically it. And what I'm going to do now is I'm going to share with you guys these 5 companies. And as always, of course, some of these companies might be overvalued. Some of these companies might not be, the type of companies that you want to invest in. So please do your research. And the first one we're going to talk about today is Salesforce. We've already started talking about Salesforce. Salesforce basically Moat comes from the switching cost side of things, because the CRM offers integrated solutions. So for example, sales, services, marketing that became deeply embedded into a company's operations. So it's very difficult for for the company to all of a sudden say, you know what, let's switch, because changing CRM systems will basically be time consuming, as well as it will be expensive and might actually disrupt your entire basically flow of whatever operation. So for that reason, most companies will not want to do that. So 256 billion market cap, so it's a huge company. It has a wide moat. This is the wide moat that we always talk about. I always say, because a few people messaged me and said, oh, what do you mean moat? Like, what does that actually, hopefully this will make sense, right? And they started paying dividends right now. Profit margin is okay. Return on equity is fine. Return on invested capital is still growth side of things is okay. 9%, $12 billion of free cash flow. 11% when it comes to the growth expected next year. 9% when it comes to revenue. 19% basically upside from where we are. $325 per share is where they think the price should be. The next one that we're looking at today is Broadcom. Okay. And this one has a proprietary chips, basically. Broadcom owns a highly specialized chips used in data centers, networking, and mobile phones. And of course, for that reason, it is very difficult for any other company just to kind of come in, because these data centers are not going to switch from one customer to another very quickly. So they have a long-term supply agreement with major clients, if you like Apple and so on. And for that reason, these companies stay with them. So right now it has a market cap of 1.2 trillion company, which is absolutely ridiculous. Because when I started buying this company, and I will share with you guys how many shares I own of this company and so on in a second. When I was buying, I think it was less than $500 billion in terms of market cap, and right now it's grown so much. Dividend side of things is really, really good. 14 years of increase in that dividend, 14% when it comes to the 5-year growth rate. You will get about $2.36, and the safety is 67%. So the highest you can get is 99%. 61 and above is very safe. Is safe. Profit margin, return on equity, return on invested capital, really good. Excellent free cash flow, $22 billion. A lot of that money they can buy back their own shares. They can actually pay off any debt that they have. They can reinvest into the business. They can increase the dividends and all of these things that will help as the shareholders. And this is what I love about these type of businesses. They have excellent free cash flows. On top of that, they have a wide moat, so the competition cannot all of a sudden take over their business and so on. They're expected to grow their earnings about 36%, revenue about 22%. It's slightly expensive right now, so I wouldn't touch it. $225 per share is where I think the price should be. Ideally, below 200, it will be absolutely amazing. But of course, you have to be careful. The next one is Eli Lilly. I don't own this one, okay, but their market cap or their patent side of things is basically one of the reasons that they have a wide moat. So they have patent protection drugs like, for example, Mounjaros and so on, the GLP ones. So yeah, all of that is basically protected by strong patents and limited competition. There is not that many companies that can compete with this company. They've got excellent pipelines. They've got brand regulatory moat as well. So yeah, they've got a lot going on. 711 billion market cap. Wide moat, as we said at the beginning, $775 per share. This one has gone up so much, and it's still, as you can see there, it is actually quite expensive. The dividend is decent. I don't like the negative free cash flow. I'm hoping that they can change that in the next couple of years, because they've had a negative free cash flow. I do not like companies that have a negative free cash flow. So that's the only positive negative I have about this company, but it is growing massively, like 68% for a pharmaceutical company. That's absolutely ridiculous. Revenue about 32%. Now, looking at the next one is ASML. This is one of my all-time favorite companies. The extreme ultraviolet, for example, lithography machines that they create is what is used to basically make every chip out there in the world. These companies that make those chips need it. So, for example, TSMC is now building a massive, basically a factory in the US. They are buying product from this company. The same goes for Intel, same goes for Samsung, same goes for the rest of the world. Now, in the long run, China might take over, but that might be 10, 15, 20 years from now, because I don't think China has the capacity to basically take over from this company anytime soon. And it's basically, this is what we call higher barrier to entry for that machines. So we're talking about machines that are from 150 million to like 300 million per unit, per machine, if you like. So really great company, 318 billion market cap. Basically, I think this is my biggest holding right now. I'll show you in a second. And dividend is actually quite good. 15 years of increase in that dividend. Annually, you get $6.33. Dividends is basic safe, 82%. Profit margin, return on equity, return on invested capital, really genuinely one of the best out there. All $11 billion of free cash flow right now, almost. EPS growth is expected to be about 35, revenue about 27. With that growth and the fact that it's upside from now on, it's $960 per share is where they think the price should be. Right now is below $800 per share. I genuinely think this one is still a cheap company. But yeah, that's the next one. The final company we're going to talk about today is one I've kind of sort of mentioned already, and this is Union Pacific. And like I said at the beginning, because of these tracks that the company uses, basically they control key rail routes basically in the western region of the United States, and there's not that many because of the regulatory involvement and so on. It's quite difficult to anybody else to get into that sort of market. So for that reason, most people, and it's costly, very, very expensive to do those tracks. So for that reason, money companies will stay away from this. 136 billion market cap. It has wide minimum, like we said, $231 per share. Dividends are absolutely amazing. 18 years of increasing that dividend. $5.36 for every share of this company that you own. 88% when it comes to dividend safety. Profit side of things is absolutely brilliant. They have excellent free cash flow. They're expecting the earnings to grow about just 3% this year, 1% this year. Very cyclical business, because remember, they are moving goods from one A to B. So if the economy is slowing down, people are not ordering as much, and then of course it will affect this company. So for that reason, now we're talking about recessions and China, this and that. So a lot of that will affect the company. But in the long run, I think this company is solid. I've had it in my portfolio for now over 4+ years, and I'm going to continue to doing that. So just final thing I want to share with you guys is from Sharia Compliance side of things. So if we go here and just remove that, you can see from Sharia Compliance side of things, this one is the one that has a slightly higher interest bearing debt. Other than that, they're all Sharia compliant, including Zoya. I always use Zoya because it's finding it easier. And don't get me wrong, by the way, I don't have anything affiliation or anything like that. This is the standards that they use. If you go to their website, by the way, with this website here, you can actually download these standards and look at it yourself, okay, to understand it. And I urge every single investor out there to do that, because that will help you massively understand why you invest in certain companies. Because there's a lot of new websites that are coming up that are telling us all sorts of things, and when you look at it, what they're looking at, I'm like, wait, how does this make sense? So just to use the standards from here, because there's a lot of scholars that came together to put these standards together, and I feel comfortable using that rather than any other website or any other applications. Right, let's go back to the portfolio. I'm going to show you these companies. So Broadcom, like I said here, I have this is one of my biggest holdings as well. Look at the profit here, 5,500 of that basically money is actually profit, 431% up, which is absolutely ridiculous. I used to buy this company when it was trading, like it had a PE of, I think, not PE, PE about 18, I think it was, and dividend yield was about 3%, and right now we're looking at less than 1%. So overall, great company. So that's how much I own. That's basically, as you can see there, my average is $48, $49. Let's make it $50 if you want to, okay? I was buying when it was $50 per share, and look at it right now. I wish I bought more and more and more, because I could have made a lot of money in that company, right, off just that company. Now the next one is ASML. The ASML is my biggest holdings, if you can, okay? It's up about 11%, $654 per share. It's almost at £10,000 in that company. When if I change this to, for example, value, you'll see is my biggest holding, if you like, okay? But if I normally like to keep it this way. The next one is the one that we talked about today, is Union Pacific. So another one that I own, about 5%, 6% up. Basically, $206 basically is my average. If you right now it's about 230. I would love to add to it, but right now, based on this, I don't think I want to add to it. I'm just going to wait maybe to drop it below. If it goes below 200, I think I will be buying more of that company. And the final one I want to show you today is Salesforce. And the Salesforce is undervalued. I'm definitely buying it. I'm buying more. We talked about it in the last video. $237 per share is basically where my price, average price is. And right now I'm up just a little below 8%. So that's what I wanted to share with you guys. I hope you're enjoying this type of content. I hope you're learning something. I hope this is opening up your eyes to learn and basically more about stock markets, and buy high quality businesses and then hold them for a long time without worrying about what's happening to the stock market week in, week out. Some weeks we're up, some weeks we're done. The most important thing is, do you have a goal? Do you have a goal? Do you have a plan in place to say, I'm investing this much and I'm going to ignore the noise? And if you are one of those people, enjoy your investment, inshallah. And if you can join us on this journey, that would be absolutely amazing. I've got a few more I need to reply to, a few brothers I need to reply to basically today. But if you haven't sent me your portfolio, just to do that, please. It would really genuinely open my eyes, and some of the things that I've seen was absolutely amazing. Genuinely, like I said, people in their early 20s that have already got, I don't know, 20, 30,000 pounds in their investment portfolios, which is absolutely wonderful to see. Anyway, have a wonderful day. Assalamu Alaikum.